Hi everyone, this is Victor here. In this video, I'm going to review Nasdaq stock with the stock ticker NDAQ to see if it's one of the best dividend growth stocks for long-term investing. You may want to know this. Nasdaq is the parent company of the Nasdaq Stock Exchange. Nasdaq owns the Nasdaq Composite Index, which is one of the three largest market indices in the US. Nasdaq also owns the very popular Nasdaq 100 Index. Historically, Nasdaq, the parent company, outperformed the S&P 500 Index and even its own Nasdaq 100 Index in the past 10 years. Obviously, past performance does not guarantee future results. So in this video, I'm going to analyze Nasdaq stock to see if it's one of the best dividend growth stocks for long-term investing. I will cover these topics in this video. First, Nasdaq's business overview. You will learn about Nasdaq's four major businesses and how Nasdaq makes money. Second, Nasdaq's revenue guidance, economic moat, and long-term prospects. Third, Nasdaq's major competition and biggest risk. Fourth, Nasdaq stock valuation. You will learn about how to calculate Nasdaq's intrinsic value. And fifth, Nasdaq stock rating. I will give you my overall stock rating for Nasdaq at the end of the video. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock reviews and investing videos a week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock reviews and investing videos a week that will help you become a great investor. The link is in the video description. Take a look, let's start. Nasdaq is most well known for its Nasdaq Stock Exchange, which is the second largest in the US, right behind the New York Stock Exchange. Nasdaq also owns the Nasdaq Nordic Exchange, Nasdaq Baltic Exchange, and other exchanges in the US, Canada, and Europe. Nasdaq is much more than a stock exchange business. Nasdaq has other businesses including anti-financial crime services, market data services, investment analytics, index business, and marketplace trading and clearing services. This is from the recent annual report. Nasdaq is a global technology company serving the capital markets and other industries. We manage, operate, and provide our products and services in 4 business segments: market technology, investment intelligence, corporate platforms, and market services. If you look at the revenue by segment here, in fiscal 2021, you can see Nasdaq's investment intelligence and market services business segments contributed the largest revenues and the most operating income. These two businesses are very profitable. They had a very high operating margin in fiscal 2021. Nasdaq's corporate platforms, which is Nasdaq's listing business, is also very profitable with a very high operating margin. Nasdaq's market technologies operating margin is much lower than other business segments, but management believes this business segment has a lot of growth opportunities going forward, especially in anti-financial crime and trade surveillance services. Let's review these 4 business segments so you will know how Nasdaq makes money. The first business is Nasdaq's market technology. This business focuses on anti-financial crime technology solutions and trade surveillance services. Its customers are market infrastructure operators, other stock exchange and option exchange, clearing houses, central security depositories, regulators, banks, broker-dealers, buy-side firms, and other corporate businesses. Now, I'm not an expert in the anti-financial crime sector, so I do not know whether Nasdaq's market technology solutions are competitive in the market. This is based on what I learned from the most recent annual report. Nasdaq's management believes that anti-financial crime solutions are one of the fastest growing areas for Nasdaq. This is why Nasdaq acquired Valuation in 2021. Valuation is a software-as-a-service anti-financial crime company. All its fraud detection and anti-money laundering services are provided through the cloud. Around 97% of Valuation's revenue is recurring. This is very important because Nasdaq is moving more services into a software-as-a-service business model. Here, you can see Nasdaq's annualized recurring revenue, ARR, has been growing consistently every quarter. For example, in the recent Q4 quarter, Nasdaq's total annualized recurring revenue from all the business segments was $1.871 billion. In comparison, Nasdaq's total revenue was $5.89 billion in fiscal 2021. Going forward, Nasdaq will have more recurring revenues because Nasdaq is moving more services to the cloud and to become a software-as-a-service business. The second business segment is called Investment Intelligence. This business segment includes Nasdaq's market data, index, and analytics businesses. This is from the recent annual report. It explains how Nasdaq earns revenues from selling real-time and historical market data to customers, how Nasdaq earns revenues from licensing Nasdaq indexes to customers, and how Nasdaq earns revenues from providing analytics services to asset managers and other market participants. Our market data business sells and distributes historical and real-time market data to the sell side, the institutional investing community, retail online brokers, proprietary trading shops, other venues, internet portals, and data distributors. Our index business develops and licenses Nasdaq branded indexes and financial products. License fees for our trademark licenses vary by product based on a percentage of underlying assets, dollar value of a product issuance, number of products, or number of contracts traded. We also license cash settle options, futures, and options on futures on our indexes. Our analytics business provides asset managers, investment consultants, and institutional asset managers with information and analytics to make data-driven investment decisions, deploy their resources more productively, and provide liquidity solutions for private funds. Here's the important part you want to know about Nasdaq's index business. It explains why this is a very profitable business. Nasdaq owns the Nasdaq Composite Index and the Nasdaq 100 Index. These two indexes are very popular among investors and portfolio managers. Many companies pay licensing fees to Nasdaq to create their own ETFs and other financial products that are linked to the Nasdaq 100 Index. Nasdaq earns a large amount of licensing fees from other companies based on how much assets linked to the Nasdaq 100 Index. This means Nasdaq earns more licensing revenues from other companies when there are more ETFs and other financial products that are tracking the Nasdaq 100 Index. For example, at the time of making this video, the QQQ ETF that tracks the Nasdaq 100 Index has 192 billion in assets under management. Invesco pays Nasdaq large licensing fees to track the Nasdaq 100 Index based on a percentage of the 192 billion assets under management. The third business is corporate platforms. This includes Nasdaq's listing services, investors relations services, and ESG services. These services are mainly for companies that want to go public through IPO or direct listing on Nasdaq Stock Exchange in the US, Canada, or Europe. Nasdaq's main exchange are the Nasdaq Stock Exchange, the Nasdaq Nordic, and Nasdaq Baltic Exchange. Nasdaq also has other equity and options exchange in North America and Europe. You want to know this. As of December 31st, 2021, a total of 4,178 companies listed securities on the Nasdaq Stock Exchange. In 2021, the Nasdaq Stock Exchange attracted 1,000 new listings, including 752 IPOs, representing 73% of US IPOs in 2021. Of the 750 IPOs that listed on the Nasdaq stock market, 319 were operating companies, representing 76% of all operating company IPOs in 2021 and 71% of SPACs IPOs. Nasdaq is very popular for tech companies. In recent years, many high-tech companies and SPACs chose to list on the Nasdaq exchange instead of the New York Stock Exchange. If you look at this revenue by business segments here, you can see Nasdaq's corporate platforms business contributed the third largest revenue in fiscal 2021. This business is very profitable and has a high operating margin compared with other business segments. In my opinion, Nasdaq's listing business is the most important business because this business drives more revenues to other Nasdaq businesses. The fourth business is market services. This segment includes Nasdaq's equity derivative trading and clearing, cash equity trading, FICC, and trade management services businesses. Nasdaq owns 6 options exchange and 3 cash equity exchange in the US. Nasdaq also operates other exchanges in Canada and Europe. Based on my understanding, Nasdaq's market services business earns transaction revenues primarily from the number of stocks and options that are executed on Nasdaq's exchange every quarter. For example, according to Nasdaq's quarterly volumes here, Nasdaq earned 13 cents for every US equity options contract, 44 cents for every European equity options contract, 48 cents per 1,000 US shares traded, and 11 cents per 1,000 worth of European shares traded in the first quarter of 2022. This means the more trading activities and market shares Nasdaq captures, the more transaction revenues Nasdaq will earn every quarter. Market services business contributed the most revenue and most operating income for Nasdaq in fiscal 2021. It also has a very high operating margin compared with other business segments. In terms of financials, Nasdaq is a very profitable business. It had an operating margin of 53% in fiscal 2021. Nasdaq's operating margin has been very consistent in the past 5 years. This is from Morningstar. You can see Nasdaq's revenue, operating income, operating cash flow, and free cash flow did grow consistently in the past 10 years. This is from Seeking Alpha. In the past 10 years, Nasdaq grew at a compound annual growth rate CAGR of 5.52%. Its operating income grew at a CAGR of 7.76%, and its diluted earnings per share grew at a CAGR of 12.61%. During the same period, Nasdaq did outperform the S&P 500 by a large margin because of Nasdaq's consistent revenue growth, operating income growth, earnings per share growth, and dividend payout every quarter. At the time of making this video, Nasdaq's forward dividend yield is 1.18%. Nasdaq had been growing its dividends consistently in the past 9 years. Nasdaq is not a capital-intensive business. Nasdaq has very small capital expenditures, capex, each year. This is why Nasdaq's free cash flow is very close to its operating cash flow every year. This is a good thing because it shows Nasdaq does not require a lot of capital to grow its businesses every year. Nasdaq also acquires other businesses from time to time. I will talk more about this later. Because Nasdaq does not require a lot of capital to grow its businesses, Nasdaq tends to return most of its free cash flow to shareholders through dividends and share buybacks every quarter. When we're investing in stocks, we have to be forward-looking, so let's go over Nasdaq's revenue guidance, economic moat, and long-term growth prospects. Nasdaq's management gave this mid-term 3 to 5 years revenue guidance for these 3 business segments: market technology, investment intelligence, and corporate platforms. In the market technology business, management expects its revenue will grow at a CAGR of 13 to 16% between now and 2025. In the investment intelligence business, management expects its revenue will grow at a CAGR of 5% to 8% between now and 2025. In the corporate platforms business, management expects its revenue will grow at a CAGR of 3% to 5% between now and 2025. In the market services business, management did not give revenue guidance because this business is not as predictable as other businesses. Overall, without including the market services business, management expects the 3 business segments' total revenue will grow at a CAGR of 6% to 9% over the next 3 to 5 years. Here's Nasdaq's growth strategy going forward. Increasing investment in businesses where we see the highest growth opportunity. We have increased investment in fast-growing markets that we believe help solve our clients' biggest challenge and are likely to generate growth for our stockholders. These areas include the index and analytics business within our investment intelligence segment, broader governance, technology, and consultative solutions, including ESG-focused solutions within our corporate platforms segment, and anti-financial crime solutions and trade surveillance in our market technology segment. Nasdaq sold off its US fixed income business in 2021 because this fixed income business had very low growth rates. Instead, Nasdaq acquired Verifin in 2021 in order to expand its market technology's anti-financial crime services. Verifin is a software-as-a-service anti-financial crime technology company that provides anti-money laundering and financial fraud detection services. I talked about this earlier. Nasdaq is moving more services such as data and investment analytics to the cloud and turning them into a software-as-a-service business model. Also, Nasdaq is moving the North American exchange to Amazon Web Services (AWS), starting with the Nasdaq MRX Options Exchange this year. Because Nasdaq is moving more services to the cloud and transitioning more services into a software-as-a-service business model, I believe Nasdaq's recurring revenues will continue to grow consistently going forward. In the recent earnings call, management said this about Nasdaq's listing business and index business. We continue to have a healthy pipeline of companies expecting to tap the public markets during 2022. In fact, we have more than doubled the number of S1S on file with the SEC compared to the prior year period. Although market volatility could cause some delays to IPO timing, something we're monitoring closely. And in our index business, we expect index asset values to experience some impact associated with various market levels and investor appetite for products tracking our indexes, but also the benefit from higher futures trading volume due to the use of our core indexes in market hedging strategies. I said this earlier, I believe Nasdaq's listing business is the most important business because this listing business tends to drive more revenues to other businesses such as Nasdaq's anti-financial crime and fraud detection services, index business, market data business, investment analytics, ESG business, and trading securities on Nasdaq exchange. I believe Nasdaq has 3 biggest competitive advantages: its branding, its index business, and its market data business. Nasdaq is known for listing high-tech and fast-growing companies. In the US, the most followed indexes are the S&P 500, the Nasdaq Composite Index, and the Dow Jones Industrial Average. The Nasdaq 100 Index is a very popular index that is tracked by many ETFs and funds around the world. The Nasdaq 100 Index includes the largest non-financial companies listed on the Nasdaq Stock Exchange. The most well-known companies include Apple, Microsoft, Amazon, Tesla, and Alphabet. In my opinion, most tech companies that want to go public will want to list on the Nasdaq Stock Exchange because of Nasdaq's branding and the possibility to be included in the Nasdaq 100 Index. Also, based on what I know, Nasdaq owns a large amount of proprietary market data from the thousands of companies that are listed on Nasdaq Stock Exchange and Options Exchange. Many companies such as asset managers and traders will continue to buy this proprietary market data from Nasdaq to help them make better investment products and investment decisions. In terms of competition and risk, Nasdaq has many competitors. For example, Nasdaq's listing business biggest competitor in the US is the New York Stock Exchange, which is owned by the Intercontinental Exchange. Many non-tech companies may choose to list on the New York Stock Exchange instead of Nasdaq because of the New York Stock Exchange listing services and pricing. Nasdaq's market data business competes with Intercontinental Exchange, CBOE, TSX, and Dow Jones Company. Nasdaq's index business has several major competitors including the S&P Dow Jones Indexes, MSCI, and FTSE Russell. Nasdaq's analytics business competes with Morningstar, FactSet, and other market data analytics companies. Nasdaq's market service business competes with other major exchanges such as the New York Stock Exchange, the CBOE's Options Exchange, the TSX Stock Exchange in Canada, and the London Stock Exchange in Europe. Nasdaq also faces market risks that are outside of the company's control. At the time of making this video, both the S&P 500 and Nasdaq are in a large correction because the US inflation rate is at a 40-year high, and because the US Fed is planning to raise its interest rates and reduce its balance sheet aggressively to tame inflation. Nasdaq earns more listing revenues when it's a bull market because many companies want to go public during a bull market. But when we're in a large correction, many companies may postpone their IPOs or direct listing until the market recovers. This means Nasdaq may earn lesser listing revenues when the market is in a correction. The market services revenues are mainly dependent on Nasdaq's trading volume and transaction pricing for options and stocks every quarter. When we're in a large correction, traders and investors may reduce their trading volumes, which will lead to lower transaction values for Nasdaq. Let's calculate Nasdaq's stock intrinsic value so we'll know whether Nasdaq stock is undervalued, fairly valued, or overvalued. I always use this intrinsic value calculator here to calculate a stock's intrinsic value. If you want this calculator, you can download it in my Patreon blog in the video description. Here are the key assumptions. First, I define Nasdaq's intrinsic value as its future cash flows discounted to the present day. The discount rate is 8%. This is slightly higher than the 7% cost of equity from Finbox.com. Nasdaq's most recent 12 months of free cash flow is $1.34 billion. This free cash flow excludes the $323 million one-time structuring items from the Valuation acquisition in 2021. Based on management's revenue guidance and the economic prospects I talked about earlier, I believe Nasdaq's free cash flow will grow at a compound annual growth rate CAGR between 6% and 7% over the next 10 years. In comparison, Nasdaq's free cash flow grew at a CAGR of 6.84% in the past 10 years. To calculate the terminal value at the end of year 10, we're using both the perpetual growth model and the exit multiple model here. Then we take the average of both models to calculate the terminal value. Let's go over these three case scenarios here: the worst case, the normal case, and the best case scenario. Under the worst case scenario, we're using compound annual growth rate CAGR of 6% over the next 10 years. If we forecast Nasdaq's free cash flow for the next 10 years and discount the free cash flow to the present day, Nasdaq's intrinsic value should be around $30 billion for the entire company, or $180 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using compound annual growth rate CAGR of 6.5% over the next 10 years. If we forecast Nasdaq's free cash flow for the next 10 years and discount the free cash flow to the present day, Nasdaq's intrinsic value should be around $32 billion for the entire company, or $188 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate CAGR of 7% over the next 10 years. If we forecast Nasdaq's free cash flow for the next 10 years and discount the free cash flow to the present day, Nasdaq's intrinsic value should be around $33 billion for the entire company, or $197 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Nasdaq's intrinsic value should be around $188 per share. This means Nasdaq stock should be slightly undervalued by around 2.84% at the time of making this video. Just to compare, Morningstar estimated Nasdaq's fair value to be much lower at $161 per share. To summarize, here's my Nasdaq stock rating based on the revenue guidance, competitive advantage, competition and risk I talked about earlier. First, in terms of economic mode rating, I will give Nasdaq a score of 3. This means I believe Nasdaq has a medium economic mode. Second, in terms of earnings growth rating, I will give Nasdaq a score of 2. This means I believe Nasdaq has a stable earnings growth. And third, in terms of profitability rating, I will give Nasdaq a score of 2. This means Nasdaq has a very profitable business. Overall, I will give Nasdaq a total score of 7 out of 10. This means I believe Nasdaq is a great dividend growth company for long-term investing. I bought a very small position in Nasdaq stock about 1 week ago when the stock was below its intrinsic value. The portfolio allocation in Nasdaq is around 1%. If Nasdaq drops further, I will likely buy more. My plan is to hold it for many years and let it grow gradually. Based on my estimates, I believe Nasdaq's intrinsic value is around $188 per share. I will update Nasdaq's intrinsic value every quarter whenever it releases its earnings. If you want the latest intrinsic value update, you can download it in a Patreon in the video description. Now, all these estimates are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. It's important to always invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.